FVG or imbalance, what you should do trade the FVG and imbalance, is there have a difference? Yes, definitely it's have a difference, and so a lot of things is have in there. So in this video I will explain you everything that what's about FVG and how to trade FVG and how to trade the imbalance. So I will share with you this the concept, and I will share the strategy. Also I will share a live trade proof that I have made recently. So let's get started this video right now here. So here you can see I have drawn some example in my computers here. So you can see first I call this is an FVG and this is an imbalance. So there you can see the chart. As you can see, if you go for looking for this and this completely same, there is no difference, right? There is no difference, but there is we have. So first of all we're going to mark it that FVG and imbalance, they're correlated with each other. So first of all we'll mark that is FVG. So this is a gap. FVG basically a gap. This inside a 3 candle gap, so which is called FVG. So this is here. So this is a FVG. So let me mark it FVG. So this is FVG we found out, and I'm gonna mark it here for this one also FVG. Okay, this is also another FVG. So we found this two FVG here. So what you should do trade that what you should do for imbalance trade. So for example, so most of the trader for who is mostly trade on FVG, so they are mostly enter a position when it's going to falling down. They enter this one FVG and target the recent high. So for example, some people don't enter the top one FVG, so they mostly enter one middle of this FVG. That's fine, you can enter here. So and for the imbalance is for the imbalance trader is mostly enter here. So this is the last candle which is produced at FVG. So the last candle which is produced at FVG, so this is mostly the imbalance trader, a demand zone here. So for example, so why we should do that, and if we go for really for this one, and actually this is for FVG, and if you go for the imbalance trader, if you actually enter in here, so what you can see that mostly you can see a reaction from this FVG and then tap into the demand zone, and then we target the high. So this is how the FVG and imbalance is mostly work. And imbalance is we always consider the last candle before the imbalance is formation. So this is the imbalance, and this one is also imbalance called, but this is FVG trader don't consider that as a demand zone. So now we are going to consider this is now this is fine, we have drawn something. So what we will be the difference why we should trade that imbalance instead of FVG. The most important reason is if you're playing for a trade from there, your stop loss must be below this low, which is here, that must be below this low. You can keep it, and the target is definitely the recent high. So if you see that this there is not creating that actually the trading risk reward ratio, you can see 1.04, so this is actually 1.04:1. Target ratio is not good enough. And if you go for the middle of the FVG, that's fine, you can find 1.72, so which is 1.72 into 1. So there is also good risk reward is also fine, but this is actually the lowest and the poorest. So minimum risk reward is actually 2:1. So what we can see, if we finding that imbalance trader, so imbalance will definitely enter from this the last candle, and this lowest point is this the last candle low, and target is the recent high. What you can see, there is so lot of difference. That is, you can see when we are targeting this imbalance is pointing this one, and you can see the risk reward ratio is increased and too much. It is 2.6:1. So which is actually this trade. But if we trade this imbalance, what we can get this actually, what you can see this, we can raise $100 and we can get this $260. And if we for the FVG we raise $100 and we get $170, $72 something. So this is actually the poorest risk reward in FVG, and the imbalance we get the highest risk reward. So this is how imbalance and FVG have a little bit of difference from there. So you can do this trade in both of this, but most of the time you see that imbalance is sometime you see that the market is mostly came to the imbalance and then shoot out. So that's fine, but if you actually considering this is you are entering there, so this is actually making your poorest risk reward ratio. So instead of poorest risk ratio, sometime you miss the trade, that's fine, this is not a problem. So you can miss sometime the trade. So always my personal consideration is I always look for imbalanced trade. Sometimes I got missed this trade, but that's okay. Instead of poor risk reward, I can get a good risk reward trade in if there. So this is how actually the imbalance and FVGs work. and you can see for FVG also the stop loss is getting bigger and the target is getting smaller. In imbalance we can see a tiny stop loss and a bigger target. So now I will show you that how it's work actually in the live market chart. So let me forward there. So this is actually a live market. What we can see, this is the market is actually creating a bullish momentum. It is bullish, so we'll definitely look for the buy. So now we'll find some statistics and structure here. So what you can see, there is a recent break of structure. So this is recent break of structure. Let me mark it as a break of structure, and this is a recent high, so we can make it as a recent high. So this is the recent high, and the lowest point is before creating this move. Actually before creating this breakout, the lowest point is here. So this will be the recent low. So this is our recent low. Actually this is a structure marking ideas. If you didn't watch my structure marking ideas, you can check out on my YouTube channel. Also you can find in my video description a learning video playlist, so you can go there, you can find a best way to identify the structure marking, so that you can watch this and then you can understand easily that how the structure marking is work. So finally we mark this structure. So now we can find what actually we are finding, that imbalance. So this is actually we are finding that imbalance here and FVG, and you can see this one is already filled out. So this is we're not interested. Also this is in the premium, this is the premium zone, and we always find the discount zone. The premium discount zone I will mention in another video that how it's work. The premium zone is basically instead of higher than 0.5% in Fibonacci and lower than in 0.5, it's a discount zone. So we are finding a discount zone, FVG or imbalance. So first of all we will find a FVG here. So you can see 0.618, 0.778. We can find a imbalance zone here. So this is an FVG and imbalance zone. So this is an FVG we can find. So first of all we mark it as a FVG. So this is we find out. So where we're going to placing that our imbalance trade. So if we there also I'm going to share you that how if we placing our enter this FVG, the stop loss must be the last low, at least this one, the last low, and the target is actually this is the recent high. We find this 1:2, this is we can find this 2.8, 2.8487, that's fine, 2.87.1. but if we instead of doing this FVG trade, if we do trade in here recently a imbalance, so which is before this FVG we find a imbalance zone, the last candle which is produced that a imbalance zone. So this is our demand zone. So now we're just ignoring this FVG because we are not doing the FVG trade, we're the imbalance trading. So we are going to increase our risk reward ratio. So now will be our entry to the imbalance zone here. So this is our entry zone to the imbalance, and you can see our stop loss is the same still and target is still same, but you can see the magic is, you can see there the magic is, you see that the risk reward ratio is 1:4.9, but if we exactly enter the level we can get this 5.2, which is 5.2:1. It's a very biggest ratio. This is completely a double. So this is actually I'm risking $100, I can get there for $500, I'm risking $100. So this is actually the strategy, and this is the magic for imbalance trading. So now we'll forward this candle and let's see when this market is came to this. Now we can see there recently this area we have the FVG, we see that. So let me mark the FVG again. So this is actually our FVG area. So this is, and you can see in FVG area we got a reaction, that's fine. So this means this imbalance area, and there is a lot of work orders and the institutional investors are taking interest there. So now you can see the FVG is failed. So now we're ignoring that FVG and we're strictly analysis, or this I'm gonna making this trade into that the imbalance zone, which is the imbalance order block demand here. So this is here, and let's play it, and you can see we got some reaction here too, and you can see our trade has just been triggered here and it has been tapped to our imbalance zone, and our trade has been triggered at this point. So now we'll play this trade, and where it's gone, it's really we win or get the stop loss. So now let's see, you can see the move a big push here, and you can see the recent break of structure also is happened here. This means a change of character is happened. So now you can see the change of character happens. So now we are pretty sure that the market should go to the higher, it should go to the upside. So now we are going to playing out. Now you can see that it has been tapped again to the demand zone. The reason why it's tapped again, and why the reason is there before this the breaking change of character, you can see there is created another imbalance, a small imbalance zone, and this is an FVG, and our interested the new, if you miss your entry in this area, then in that case you can enter this the new created imbalance here, which is actually new created imbalance demand. You can enter your trade also from here, this area. If you do another trade, if you miss the fast trade here, so you can make, and this is the lowest point, we can keep SL, and the target will be the same one. So you can get actually the two trade in one place, that highest target is same one, and you can find out this is the highest mark, and we're gonna marking it as a, let's see we got the target is not or not. Now you can see it was moving forward, and you can see it's nearly came to that our previous entry zone again, but still we have to be patient, and we are going to playing our trade perfectly by patiently. You can see it was started shooting out and going upside there, and here also let's see, you can see finally we smash our target. So you can see this two trade, actually this is the first one and the last second one, so both of this two trade has been successfully played out and it hit the target successfully. So this is how the imbalance and FVG traders, if you combine both of them, FVG and imbalance, if you combine them, so you can make a good perfect trade, and you can increase your win rate ratio and your trading risk reward ratio, and so a lot of things you can find out there. And if you get, this is a voice video, you can find out in related to FVG and imbalance combined. So you can give this video like, and you can share it with your friends, and you can subscribe our channel also, and stay tuned with us. Also follow us on our Twitter handle X, and you can follow on our Telegram channel. And thanks for watching this video.